Folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today is Friday, June 27th, 2008. Well, today was a fascinating day for a couple different reasons, and we're going to look at the charts and really delve into things today because I want to point out some interesting similarities that we've seen in the chart patterns over the past few months and what's forming here. And I really want to look at the oil trade and how it's progressing, because late in the day today, and by the way, oil was up dramatically going into the last 5 minutes of the oil contract trading, right into that 2:30 p.m. Eastern time frame, and all of a sudden we saw a massive reversal. And it still closed oil to the positive side. Oil was still up just under $1 today, but it was up as much as about $3, right around that 143 area, give or take. So we're going to take a look at that, what happened today late in the day to cause that reversal, and how does it affect the markets overall. Now, the overall indexes today really had a quiet day. Now, they were down earlier, but we rallied back to close the day slightly to the downside, and you really saw that in the NASDAQ. The NASDAQ was down a measly 5.5 points. The S&P was down about 4.75, both just slightly to the downside. However, the Dow got hit a little more. And remember, the Dow's kind of like that fake index. It's the people's index because they always harp on the Dow. But really, the Dow is price cap weighted, not market cap weighted, which skews it totally. And it's only made up of a few stocks, while the S&P 500, obviously you have many, many more companies in that, and it gives you a better view of the overall market. Alright, folks, so while the Dow was down about 100 points, which, by the way, dipped into bear market territory on the Dow, being down at one point during the day more than what's considered 20% drop for bear market activity or bear market percentages. Alright, so in any case, a quiet market at the end of the day, but intraday the markets did have quite a bit of movement, and we're going to look at that as well. So let's get right into these charts here, because today, again, was fascinating for a few different reasons, and we'll point them as we go. Now, volume today, again, was good. It wasn't as heavy as yesterday, but it was decent today. About 2.3 million contracts traded on the ES futures today, the S&P Mini 500 contract, and that was just slightly down from 2.65 that we traded yesterday. And for being a Friday afternoon, that's not surprising. What you can see here is that the markets were just kind of up and down all day. We had a little bit more of a dip here in this early afternoon period, right late lunchish, 12:31ish. You had a little bit of a sell-off where the market looked like it was going to start to tank again, but then the market recovered very nicely into this 2:30 time frame. And as I mentioned, what do we know that happened at that 2:30 time frame? And I'll show it right here, guys. Let's go to the USO intraday. Look at this. Look at that drop on the USO, which mirrors oil right to the 50 moving average, mind you. Really the first break of that 20 moving average that we've seen in quite a few days. So nonetheless, a beautiful little drop there, and that basically buoyed the market. And we've been talking about how this oil is basically what the market is. You almost don't have to look at the NASDAQ or the Dow or the S&P to know what the market's doing. All you do is focus in on this chart right here, and you basically, if it's up, the markets are going to be down, and if it's down, the markets will probably be up. And, to skew it a little more, you can obviously look at the XLF, which is the financials, and we all know that the financials have just been getting pounded lately. The XLF was down again today, and you can see the sell-off. From this point to this point, it's been a dramatic sell-off in the XLF and the financial stocks, and they continue to get pounded today, as we see, down another 30 cents. Nonetheless, going back to the ES, and this is the S&P Futures intraday chart, you can just see the choppiness of today. You had that little bit of sell-off as oil really rallied. And by the way, oil was rallying, if you could see that chart. It was up over $3 at this point, and then all of a sudden you saw that dramatic drop. And we're going to look at that and what pattern is that forming on there. Are we breaking out? Are we dipping down? Did we form a topping tail today on that USO daily chart? There's a lot of things, and it's to believe it or not, the best we can do is put the odds in our favor and look at the chart and rationalize it. So that's what we're going to have to do. And I'm going to flip to the USO daily now. And this is the USO daily. And you can see that you remember the channel we've been in here, folks. Alright, so we have this channel. Alright. And we'll draw on the lower end of the channel. And I'm drawing that a little low, but it's fine. Nonetheless, we're down to that lower end of the channel 2 days ago. Yesterday we had a big day to push us to the top of that range. And today it looked like we were breaking out. And you can see that wick at the top there. And let me erase this line so you can actually see it. And then basically right into the close, we were right at the highs with about 10 minutes to go on the USO, and all of a sudden you saw some massive selling, and it brought us right back into the top of that range. It's still a little higher than the range. If you took this high right here and drew the line across, you're going to see it's actually a little higher. So the question is, well, does this mean that we've broken out of that channel? Does this mean we're going higher, or does this mean we're coming down? And that's the $1,000,000 question, because if you can find that answer there, then you can basically know which way to go. Do you go long or short in this market? Now, you guys know we still favor a neutral market through July 4th, although we are increasing our chances of a bounce here, and we still like the extra chance. And again, yesterday we put it only at about 65 to 45, 65 to 35% chance there of that bounce. So it's not a great chance of a bounce. To be honest, the market wasn't very strong today, and in all fairness, it's not like we rallied back, and that doesn't necessarily bode well. But we are very oversold, and a lot will just have to do with this oil trade. And that's the main thing I want to say here, guys, is that, yes, we are oversold in this market, but you look at this chart right here, the USO chart. Whatever this chart does, if it falls $1, $2, $3, the markets will rally. If it doesn't, if the USO or the oil goes up $1, $2, $3, $4, $5, come Monday, the markets are going to tank. It's almost as simple as that. So just keep aware of that. Understand that this market, you trade any index chart off this oil chart. That's how fascinating the period of time we're in right now. And months ago we talked about what a fascinating time this was, seeing the hedge, the financials getting slaughtered, like the Bear Stearns issues and all that, and how it's a once-in-a-lifetime situation. And again, you're seeing that with this commodity. This commodity is controlling the markets, and that's amazing. Now, the other thing I want to point out here is that it's all about the dollar too. Though since the Fed came out with their less hawkish statement than the market anticipated, the dollar got hit. No doubt about it. And we're going to look at the UUP, which is the dollar index, and you can see we were hovering right here into the Fed. The Fed comes out here, and look at this drop in the dollar index. And this is an ETF for the dollar, the UUP. But nonetheless, I just use it to point out how the dollar has moved. Now, really what that caused was a jump in the USO, or the oil. And you can see that. Here it is on the day of the Fed, and all of a sudden you see it here after, and that's just going in reverse. Remember, the UUP chart looked like this, and the oil chart looked like this, or the USO looked like that. Now the key here is, folks, to realize, and this is something very fascinating, is that oil outside of this country hasn't necessarily increased in value relative to their currencies. Remember, with the dollar getting weaker, it causes the oil to go up for us because our dollar is getting weaker. But around the world, all their currencies are generally staying strengthening against the dollar. So in their terms of currency, oil isn't necessarily running up. And those of you outside the country that are watching this video probably understand what I'm saying. So it's a very interesting thing there, and that's why we talk about the dollar being so key. And when Bernanke his comments didn't necessarily strengthen the dollar. In fact, it weakened the dollar. That's really just added fuel to this whole issue. And you can really see that with the gold chart too. Let's look at the GLD. Look at this move on the GLD. Here's Fed day right here. We were at the lows right before the Fed, and here's where gold has gone. It's actually been a dramatic run-up in the gold. The GLD, again, is the gold ETF that you can follow for that. So in any case, my long story short there is everyone should realize that to the world, the last couple of days, oil's movement hasn't necessarily gone higher. Now, having said that, oil is very, very overbought, regardless of the consolidation pattern you saw here on the chart and the attempted breakout. Now, what I want to show you here is very fascinating to me, and I noted this in the chat room today. You guys see this pattern, right? All right, you see how we were up here, and we had a little bit of an area where we moved lower, and then we moved up here and actually took out the high, went above it, made that little bit of a wick, and then sold off. Where else have we seen that pattern? And remember, doing technical analysis is understanding pattern. And I just want to point this out. It doesn't mean it's going to come to fruition, but look at the SPY on the daily chart. All right? Remember when we called our turn date, which was right here, and then we basically had to sell off to the 20, and then a little move back up to a double top, and we went higher here, and everyone said, wow, InTheMoneyStocks.com was wrong here. The market's not turning lower. We just broke out. And then by the end of the day, the market sold all the way off, creating that wick. And then look at where we've gone since. All right? Now, the key here, folks, is look at that pattern. All right? What does that look like? All right, you had a top put in here, consolidation, pullback. All right? And a move back up, a break of the high, a wick on the top. Let's go back to that USO chart and focus in here, and if I'll just remove that and you guys can see it a little clearer. Now I'm just drawing the similarity here. Again, I'm not saying that this is the same exact pattern, but it's important that you guys understand this watching these videos. Alright, so you had a move up here, consolidation, pullback, a little bit of pullback, move back up, break of the high, and a little tail there. So just keep in mind, and in both situations, did that high get taken out with a wick? Absolutely there. And let's go back to the SPY. I'll take away some of these candles so we can actually see it a little clearer. Alrighty. Did that high from this point where we had called the top break out and go higher? Absolutely. It looked like it was breaking out, but we always talk about that as being a fake out. So keep that in mind, folks. In any case, it doesn't mean, and I want to stress that, listen, in all fairness, it's a power move, and this oil is non-stop. It just keeps coming back. But again, we feel that oil is very overbought here, and we have to go with what our gut tells us here. And should we be wrong, you just abide by your stop, and that's all you can do. All right, folks? So keep that in mind. Last of all, just to touch on Google, you see Google was basically flat on the day, down just 75 cents. And nice little tail on Google there, also worth watching, all right? Could this be a possible way for a bounce? We'll find out next Monday. All right, folks, enough on that. Keep eye on oil. It means everything in this market. Come join the chat room. It's a wonderful chat room at inthemoneystocks.com, and we'll be back on Monday. Take care.